Bom dia. Antes de mais nada, desculpe por não falar português. Apresentarei em inglês. Desculpe. So first of all, I'm a white man with gray hair, unfortunately, and a gray suit and a blue and white striped shirt. So, well, thank you very much, all of you, for coming today. It's amazing to see such a group of clients. I'm going to speak a little bit about what's happening outside of Brazil and maybe try to tie it to some of the things that I heard in the panel, which was fantastic. Thank you for that great panel. And also some of the things I've heard these last few days, spending time with clients here in São Paulo. So we produced a report some months ago around wholesale banking, and it generated a lot of interest. Now, the market has changed a bit since that report was issued. I'm also going to talk a little bit about banking as a whole today, so wander a little bit into the retail side as well. So with that, perhaps we can discuss what some of the key trends are. And I think people ask me this quite a bit. So a little bit of background. I spend about a third of my time in the Americas. I spend a third of my time in Europe, Middle East, and Africa, and 1/3 of my time in the Asia-Pacific region. So I spend a lot of time everywhere except New York City, where I live, or I do spend some time there. But I want to talk a little bit about what's coming down the road and what we're seeing in the market, and then what it means for the transformation agenda. And by the way, I think many of these points also fit for insurance and asset and wealth management. So even though the report and mostly what we're going to talk about is about banking today, many of the points, particularly when you talk about transformation, also are very relevant in asset and wealth management and insurance. So the first thing that I do want to talk about is regulation and where regulation is going. So particularly in banking, we all know that Basel III is coming, but I think that this latest banking crisis also showed us a couple of new things that are now factoring into the regulatory agenda, not only in the United States and in Europe, but I think we'll eventually make it to Brazil and other places in the world. And one of the things we saw was that the banking crisis and the run on the bank did not occur with lines at a bank, but most of it was done, deposits fled, clients fled, and it was all done electronically, digitally, and very fast. So I think that is one of the things that regulators are really grappling with. The second thing we saw was that, particularly in the US in Silicon Valley Bank, we saw that a bank which was not designated systemically important actually was systemically important. And that was primarily because the US technology sector was banking with Silicon Valley Bank. So if you had wiped out all of their deposits, you would have wiped out the funding of quite a bit of the new technology companies in Silicon Valley. And that was a huge, huge issue. So the rules and the supervision has not really focused on this kind of critical industry concentration and the like. So I think we're going to see more there, and we're going to see more regulation around liquidity and control and risk management and governance. The other thing I do want to talk about is and we discussed it with a couple of the clients I met with this week, I was asked, what's one of the major things that I'm worried about with the financial system, and particularly banks. And the one thing we talked about a couple of things, but one was really the long-term profitability of the current model. And if you look at it, and the panel before me really had a great discussion about embedded finance and what's happening with ecosystems, which you can see as part of my presentation as well. But what's happening is the cost of capital obviously is getting more and more expensive for regulated institutions, and the cost of compliance is getting more and more expensive. So capital intensive activities like lending, financing, et cetera, are becoming more and more expensive. And at the same time, private capital, which is also one of the trends, is playing more and more of a part in financing not only retail customers, but corporates around the world. And what that, again, means and what it shows is that the arbitrage, if you will, the cost of funds, the compliance burden, et cetera, for private capital is very different than it is for, if you will, public capital or capital that's in publicly held or state-owned banks who have to comply with a myriad of different regulations. I think the other thing that, and this has really happened since we issued the report, when we issued the report, the fintech market was going very, very, going crazy. There were a huge amount of funding, new companies everywhere. All of the financial institutions around the world were really worried, not that they aren't anymore, but we're seeing now a very different market around the world. So as funding has dried up and funding has gotten more expensive, I think here in Brazil, interest rates went from 2% to something like 13.7 or around 14%. That's obviously a massive change. In the United States, the Fed funds rate went from essentially 0 to 5.5 in the space of a little over a year. Europe, ditto, other countries as well. So that's really changed the valuation story, it's changed the funding story, and there's a real divide with fintech right now. The fintechs that have created successful business models and have made and are generating cash are doing well. Okay, New Bank here, SoFi in the United States. The ones that are still burning cash, most of them are not going to survive because of the funding conditions, because of also economic conditions partly, but mostly because of funding. So there's a real kind of shakeup, if you will. And then perhaps the other one I'll talk about is digital assets. Digital assets, up until probably a year and a half ago, I would say clear uptrend everywhere in the world. About 130 pilots going on right now, central bank digital currency pilots. And if you look at what's happened is none of those pilots have really turned into full-blown implementations, even in China. If you look at what's happened now in the United States with regulation, the SEC, the U.S. Securities and Exchange Commission, the chairman has really targeted crypto exchanges. We had the fall of FTX. And all of this has really put a dent into enthusiasm and work and progress on digital assets. Having said that, at the same time, there's new legislation in Europe, MiCA it's called, which actually lays out a pretty firm regulatory foundation for digital assets. And the Chinese in Hong Kong are using the reopening of Hong Kong, they're using crypto, even though it's banned, crypto is banned on the mainland in China. They're actually using Hong Kong as one of the bases for crypto innovation. So you have a really bifurcated, trifurcated world, if you will, around digital assets. And I know here in Brazil, there's a kind of a cautious movement by some institutions around custody and trading and things like that around digital assets. So I think it's a real wild card, and a lot of it depends on regulatory preference, particularly in the United States, which I'm not saying this just because I'm American, but it's the biggest capital market in the world by far, and it tends to be a trendsetter in terms of regulation as a whole. But we could be seeing a time where the rest of the world goes one way in financial services, and the US kind of goes another way. So those are some of the things, if you will, kind of the big trends. Now, what are we seeing kind of on the ground in the next level of detail? Everyone's talking about, and many people are working on artificial intelligence, generative AI in particular. I can tell you, we as a firm are spending a huge amount of time and money on generative AI, and not just using it ourselves or helping our clients use it, business cases, but actually helping lay out what is the foundation, what models are you using, what business cases, what areas are you focusing on? And those things, actually, if you read the new European Union directive on artificial intelligence, if you haven't, I would encourage you to do it. It actually has some pretty interesting things about the various uses of AI and the risk associated with those use cases. So for example, something that helps you automate a process that is manual today is probably pretty low risk. Making lending decisions or insurance underwriting decisions or investment decisions based upon AI is certainly much higher risk. And you got to figure out what foundational models do you want to use? How does the AI align with the values of your organization? And how do you make sure that there isn't inherent bias in how you use artificial intelligence? And there are many cases, I won't bore you with them today, but where artificial intelligence was used, say in hiring, for example. There's a very famous case of a technology company using artificial intelligence to screen applicants. And what they were doing was they took successful people at the company today, and they used that profile to compare it against the applications. Unfortunately, that company had an issue with gender diversity already. It was way too many men. It was a tech company, so it's very, very common. And what they found was the AI just reinforced the current gender imbalance and other imbalance that they had, and actually caused them to make hiring decisions that made their situation even worse. Certainly it didn't address some of the issues they were trying to address. So these are the kinds of things that one has to watch out for. And even if all the AI is not here yet, it is definitely something that one should be preparing for and figuring out what is the governance framework, how do the different lines of defense, if you're a bank, for example, or insurance company, how does that work, and how do they interact and safeguard. Having said that, we're very excited about the potential around AI generating incredible productivity gains and improving customer experience in many areas, whether they're retail or wholesale customers. There's a lot of discussion earlier about ecosystems and liquidity access. If you look at what's happening, for example, in capital markets around the world, I talked about digital assets, but there are a number of new ecosystems springing up to allow faster, better access to capital markets, to financing, We're very focused on that. Cannot ignore the geopolitical risk. And if you think about the geopolitical risk now and the world being actually quite divided now between, China, Russia, perhaps the rest of the world, and then you have, the BRICS, including Brazil, which are kind of in the middle a little bit. It's a very different market when you think about international expansion strategies and you think about what your country footprint should be in terms of your business. And obviously, since 2008, for various reasons, mostly capital and regulation, financial services has become much more fragmented around the world. We expect that to continue, and perhaps, again, with the geopolitical challenges, accelerate. So I think we talked a little bit about, what people, how the transformation, set this up for a real transformation discussion. So perhaps we can talk a little bit. What we see, and this is in the report, and what we see more broadly in the market, is the challenge that most institutions we're working with face is how do you balance the run the institution agenda with the change the institution agenda, and how do you continue to innovate while dealing with running business as usual, new regulatory mandates. I know here in Brazil there's a lot of discussion about changes in tax law, changes in regulation, capping fees in certain areas. In any case, all of those things, to the extent they happen, will need to be built into the transformation, the IT agenda, key projects, et cetera. And again, this balance is the big issue that we see. And in fact, since this latest crisis, we've seen many institutions who are starting to lean towards spending more time and money on innovation, struggling because they're now getting weighed down by new regulations and new regulatory requirements. So those are some of the things that we're seeing. I think this slide really applies not only to banks, but to all of our clients, to insurance clients and asset and wealth management clients. And really, if you think about it, and you think about the budget meetings you go into, the projects you're working on, this is the kind of struggle which is kind of behind all of these types of things that we see. So maybe talk a little bit about what are some of the positive things. What are people doing to manage all of this, right? And this is, I actually thought about, do I want to bring this slide here? Because it's kind of a consultant slide, but actually I thought it was pretty good in terms of some of the steps that people need to focus on. And if you think about it, what I see quite a bit in the market, and I don't think Brazil is any different, is the clients that have a clear understanding and vision and evaluate their situation up front and really have a crystal view of what their priorities are is one of the most important things. I see such a misallocation for the ones that don't do that well. I see a real misallocation of resources and focus. And that's where, I have one client, I'm not going to name the name, but they were so focused on merging two retail businesses they had that they missed a whole generation of technology and customer experience. And arguably, if they had evaluated their situation, they would have done the migration a little bit differently. I have another client that I think really misread the seriousness of what the regulators were telling them about a certain part of their business and didn't invest enough time and money in fixing that. And subsequently, they're spending multiples of time and money because they misjudged that, and they were fined quite a bit as well. So I think that's kind of number one, evaluate. Really have a clear view of what your priorities are and galvanize the organization around that. The second thing that I see quite a bit is, even if you get the evaluation right, do you have all the skills and capabilities to actually execute on the agenda? You know, a number of our clients are going through, I'm sure you are, large cloud transformations, right? But skills are scarce. There aren't enough cloud engineers. There aren't enough data architects. There aren't enough people who have actually done all of these things. So actually procuring those people is critical. And, you know, I would say, of course, we're a source of those resources. You have internal sources, you have contractors, you have, you know, we're doing actually quite a bit of work around integrating freelancers and gig economy workers into our clients' capabilities. That's a major thing. I know here in Brazil, the freelance market is growing actually quite a bit. I think the 3 and 4 are pretty clear, and I don't need to go into those a lot. But I say the last one, or the next one, the upskill, is also really important for the reasons that I just mentioned. We had our global clients conference in Singapore about a month and a half, 2 months ago. And we had the CEO of DBS, Piyush Gupta, who's a really brilliant guy. If you don't follow him on LinkedIn or Twitter, I would definitely recommend that you follow him. He's great, not only a great guy, but he's really smart, and he's done a lot of innovative things at DBS. One of the things he talked to us about was the importance of, with new technology and the need to upskill, don't just take the people that you have and try to replace them, or just, you know, deem them as, you know, old, you know, into old technology or old ways of working, but actually take the investment and really upskill them. And he basically credits that as perhaps the most important thing he did to help transform the institution. And if you go online, you can read it. They're maybe the most cloud advanced financial institution, you know, non-fintech traditional institution in the world. And they get all kinds of awards for innovation and what they've done. So again, I think this upskill is really important. And then, you know, I think the last couple are also very, very critical. And, you know, once you've made a decision, once you have the capacity, once you kind of work through upskilling your team, you know, continue to make good decisions and also continuously evaluate things. The thing that I see all the time is that people get stuck in a project, and maybe the project was ill-conceived, maybe it didn't have the right leadership, maybe it was just too complex, and the hesitancy to reevaluate that. By the way, the same thing happens with certain businesses, right? Certain businesses that maybe, you know, are never going to meet the profit hurdles, or certain countries, you know, that are never going to have the scale or footprint that you want. Make those decisions, be decisive. And again, I can point to a number of institutions that have made hard decisions and prospered, even though they were very difficult to make at the time. And some of the ones that did not ended up paying, you know, a pretty severe price, sometimes the ultimate price. So those are a few things to think about around banking, trends, transformation, how people are dealing with some of these macro trends. I think we have a couple of questions. I want to leave some time for those. So, Eduardo, you have some questions for me?
Yeah, we have some questions for you.
Oh, there you go.
Okay. We have some questions for you, John, and thank you for your presentation. We see that some of your strategies, transformation strategies, are focused on people, and they are focused on mindset.
I'm sorry?
Mindset.
Oh, mindset, yeah.
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 So, empowering leaders to change, and also people upskilling. So it implies a change in culture. How do you see the companies doing that? What are the challenges that usually they have for that? Could you explain a little bit for us?
Yep, sure. So I think the question really revolves around upskilling and what that means relative to the culture, right? Which is kind of what I was talking a little bit about earlier. I would say there are a couple of key things that each upskilling journey that I've seen that was successful incorporate. I think number one, you pick out a relatively small group at first and you train them really, really well. And in fact, those people tend to be the most open to change and learn the fastest, and perhaps, are more digitally native than some of the others. But then it's kind of a reverse mentoring process, because many of those people tend to be younger. Okay, so we did this at PwC. We had younger people who were more digitally native, who had gone to school or were training on some of these technologies, spent time with our partner group and our directors, and really helped us get reskilled, I would say. And so I think this whole concept of having a very dedicated core of people who are initiators, innovators, and then doing, in some cases, because age is a factor here, a reverse mentoring program. We spend a lot of time thinking about how more experienced people can mentor less experienced people, right? I mean, that in our business and many businesses, that's the model, the apprentice model. The interesting thing about technology is, the intern I had last week, who just got out of school, knows how to use Power BI way better than I will ever be able to use Power BI. But that person can probably teach me quite a few things. So it actually creates, and Piyush talked about this in the speech, it created actually a completely different dynamic. So, the dynamic of, okay, I'm a senior person, you're a junior person, I'm the boss kind of thing. And I'm not saying that's the way everyone is, but, the hierarchy of a company. And actually, one of the big culture changes to your question, Eduardo, was, actually much more of a equal footing and respect for some of the skills that some of the more junior people had, because they'd been trained, particularly around technology. And the more experienced people who didn't have those skills but learned some of those skills really appreciated those people even more. So I've seen that, that's real magic when that happens. And I've seen it in our firm, but I've seen it with clients, and it was funny to hear Piyush say that about DBS and how critical that was to their journey.
John, we have a final question for you. And you, as a PwC Global Financial Services leader, you travel around the world, getting some expectations, talking with people in different companies in financial services industry. And I would like to know how we are here in Brazil. Do you think that we are doing the changes that are supposed to be done? And I know that we were talking with people here in Brazil in some meetings and companies. How will you evaluate that?
Yeah, so first of all, I don't claim to be an expert on Brazil, Okay, so please, if I say something that's wrong, forgive me. But I will share my observations and perhaps my thoughts on the comparison between Brazil and some of the other countries. I think number one, and I've been coming to Brazil. I think I first came to Brazil at least 20 years ago, maybe even a little bit longer. So you have a history, obviously, of hyperinflation and very difficult macroeconomic conditions to manage. And I think that has made the financial institutions here actually quite flexible and with an ability to really respond very quickly to different conditions. So I think I see, and that legacy, I can see it still lives on, and probably how you were able to handle going from 2% to 14-ish% interest rate. I think, frankly, that would break almost any other country, right? To be honest. So I think you have that legacy, and it's a strength, frankly. Secondly, I think the structure of the financial system here is quite different than it is in many other parts of the world. You have a different interest rate regime. You have a different set of products. You have a different currency situation than some countries, okay? So that all has impact on how you finance things, the products that banks offer and insurers offer. It impacts the size and scope of your equity, your capital markets here. So all of those things I think are pretty, are driven from the macroeconomic kind of situation. Having said that, many of the issues that we talked about today already and in the panel this morning are, that panel could have been in California, it could have been in London, it could have been in Singapore. Many of the topics that were discussed, whether it's, the customer experience, whether it's we see financial institutions going into, different businesses to deal with the threat and the opportunity of embedded finance, for example, right? So all of those things, I think I see Brazil being very similar. The fact that your fourth largest bank is a neobank is actually unusual. That's not the case in most countries. I think actually the fourth or fifth in Russia, believe it or not, is a neobank here. But in most countries, that would not be the case. The traditional institutions are still, most of the largest ones. So obviously, there's been quite a bit of innovation, and you had a market structure which allowed, a strong new competitor to come in and do well. No pun intended. A new bank, but I think I see a lot of the same, issues. In terms of retail investing, I think the penetration here when I went through with the team is much less than in many countries. The people who own equities, people tend to buy fixed income products, I think, here mostly. And I think, again, that's a bit of the legacy of inflation and devaluation and things like that. So I think the equity markets and investing, we were with a client the other day, and they were really talking about, their role in educating people about investing in equities and developing the capital markets here in Brazil and around perhaps Latin America. So I think that is one difference, I would say. And I think the insurance penetration is also a bit lower than some more developed countries, but probably in line with many of the developing countries. So I also see some similarities when I'm going to places like India or South Africa or some other places that have a blend of state ownership and private ownership of the financial system. And some of the financial inclusion challenges that exist in a number of countries. So I think Brazil's challenges, from what I can see, and again, I don't claim to be the expert, are somewhat similar, and the structure of the system with some public ownership and some private ownership of financial state. I say public, I mean state-owned institutions as well as private institutions. So I do see some real kind of similarities with that.
Thank you, John. We appreciate having you here. It's always good to have an overview on what's happening globally. Thank you for.
Thank you. And then I'm around here all day, so if anyone wants to speak more about a particular topic or subject in the hallway, I'm happy to spend time with people. Again, thank you for coming and thank you for listening. So bye now.
I'd like to call Paulo Henrique. Just wait, John. I'd like to call Paulo Henrique. There is a gift from BRB for you.